What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you as always, I am the People's Champ of Wall Street, the Bearded Boy Wonder, and today, my friends, we are talking about Netflix. All about that Netflix and chill, ticker NFLX. Now, I know that these Friday shows aren't all that popular, and usually we do them Friday morning, like early morning, because then we do, the morning after. And we're going to get back to that kind of stuff. We've just had, a holiday shortened week, and then a couple weeks ago I had to scramble up to Vero Beach, and so just been all sorts of madness happening. So normalcy will descend, I promise, hopefully, heck, even next week, as it is earnings season, and we do have all sorts of fun stuff popping off. Bruno, all the way from Portugal, how you doing? Mr. Burnett, what's up, my friend? Welcome. A lot to talk about here with Netflix. Now, Netflix is a great earnings play because, Jimmy, what's up, man? Welcome. Netflix is great because as I was reading through earnings reports, you have dissension in the ranks. So there are some firms out there that are very bullish with 270 price targets on Netflix. There are other firms that are very bearish with $93 price targets, I think I saw. So a house divided. So some people, and it's, I suppose with any business, you're going to have a little bit of back and forth. But specifically with Netflix, I think some people, from what I've read, some reports, these firms just have a tough time wrapping their mind around the numbers, right? So I don't know what it is. They're just kind of classically trained analysts and same kind of guys that, back in the day. It reminds me of, 5 years ago, people with Amazon screaming about how they don't make any money. So it's a similar thing here, and these analysts just can't get over the fact of the cash burn. So, I mean, it's a big burn, too. Netflix burned like $2 billion of cash last year or something like that, or that's what they're going to do this year. That's a lot of money, but let me tell you, $2 billion ain't what it used to be, my friends. So there's that. But I guess Netflix is spending an awful lot of money to get you, to bring you new content so that you're watching it for hours and hours, and then the old content, which they're trying to quote unquote amortize, kind of over time. The old content is not worth as much, so they're getting arguments over the old content versus the new content. Yes, Ashish, I can attest we have started. And everything looks good here on my end as far as sound. If anybody else will let you know in the chat if something's gone wrong. But I think most of the chat people will attest that things are going okay. So sorry about that. Maybe check to see your speaker settings. Are you hearing music somewhere else? And if you are hearing music, it could be from here. Because in honor of the good Dr. Paul, which I don't even know if Dr. Paul is going to be here. I don't think he will be. But we got to play it's Miami Friday Tiesto. So we're going to let that bump in the background because that's what's up. Audio and video are thumbs up. There we go. Good. All right. So let's kick this off here by digging into this price consensus and EPS surprise chart on Netflix. Lorraine, how you doing? Kurt snuck in too. What's up, Kurt? Danny? Black line corresponds to the right y-axis, which is price. The left axis corresponds to these multicolored lines, which represent the evolution of our Zach's consensus estimates over time. You see green arrows, those are earnings beats. Red arrows, earnings misses. So we've got back-to-back bogeys here from Netflix, but something to point out, despite the swing and a miss, these estimates starting high and going higher. This is what you want to see, okay? So here you can see in 2014, these estimates start to dip. The stock dips. And then as the estimates leveled out, then the stock started to take off. As they came down, the stock came down. So estimates have a lot to do with price movement, right? We've seen this 1,000 times, again, and again on our price consensus and EPS surprise charts. So the reason why I like looking at this is because earnings trends take a long time to develop. They take a long time to reverse. Whereas price trends on a dime, you know, you just wake up one day and are like, you know what? I don't like the way my girlfriend's feet look, and you dump her. Fickle beast, right? Price is a fickle beast. Whereas here, earnings, these trends take a while to turn around. So we are definitely in a bullish trend for EPS on Netflix. Now, these valuations are going to be eye-popping. Yes, the top end of this is $2.50, and yes, this is a $220 company, $220 stock. So yes, these valuations are going to be bananas, and we're going to go into that a little bit later. EJ, how you doing? Welcome. You know, I have seen a few new faces here, so I'm sorry, guys. I got to do a little bit of a commercial. Commercial A, if you're not hooked up on our distribution list, make sure to shoot me an email, livetrader@zacks.com. That way you'll get in on all of the action as we're doing these shows. You get an email, and that way you'll be here when it happens. Then what I'm typing in here in the bottom, and I hope I did it right, is a link to our chat room, the Discord chat room that we have, where you can all hang out pretty much 24 hours a day. There's somebody in there talking about the market, talking about live trader, learning, you know, whatever. It's a real nice community. People are very supportive in there. You got the mainstays like Trevor, Kurt, and now Jim, and Bruno is in there. Danny's in there too. Lorraine, I don't know if I've seen you in there, Lorraine. I think you're going to have to make an appearance. And obviously, everyone is welcome to hang out in the chat room. So I pop in there from time to time. Not as much as I should, but I just can't. You know, I do what I can. I usually have it up throughout the course of the day, but I get torn away by my other responsibilities at Zacks. Okay, so overall, what do I want to say about this price consensus and EPS surprise chart is that they're really starting to plug in some growth here on Netflix, and things are looking up just from a price consensus EPS surprise perspective. Let's look at the detailed estimates page here on Zacks. We've got them as the Zacks rank number 3 hold. I'm going to go into detail as to why that's a hold, and it's not because a few of us at Zacks have sat around the table and gone, I think this is a hold. It's not us. It's other analysts out there. We just aggregate the data. Value F, not a surprise. Growth F, that is somewhat of a surprise. Momentum style score of B. I don't need a momentum style score. I look at charts. Industry, broadcast, radio, and television. I don't know about this, guys. On the radio, Netflix. No. So remember, sometimes I look at these Zacks ranks and I go, yes, that makes a lot of sense. And other times I look at them and take them with a grain of salt. Bust out the salt shaker. Working on the car leather. Yeah, that's true, Kurt. Kurt saw my tweets from yesterday. Mini rant. Are you going to kick off the mini rant? Yes, you are, Kurt. So I have white stitching in my car. I want to make it red. And these car interior people are acting like I'm trying to turn water to wine. Like it can't be done. Nobody's going to do it. Blah, 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 blah. I bought a fabric pen from Joann Fabrics and have done like half of it myself with no problem. It's amazing the lengths to which people will go to try to upsell you on some $1,000 product that you don't care about. It's like, yo, this is... Anyway. They're going to report after the bell on the 22nd, which I believe is Monday, right? Is that Monday? Let's pull this up. Handy dandy little calculator or calendar here in Windows. Yes, Monday the 22nd after the bell. So you got the rest of the trading day today and all of tomorrow to figure out, or not tomorrow, but Monday to figure out what it is you want to do. Let's look at these sales numbers. So this is where it's at. Sales, aka revenue. Current quarter revs, 32.43% increase over a year ago period. 33.59 for next quarter. This keeps happening with the knob, but I'm not worried about that next year. 28.89% revenue growth. Big revenue growth numbers across the board for Netflix. Obviously, they're going to be reporting here. This is going to end their fiscal year. So we're going to be looking at next year. All eyes will be on next year. Earnings, EPS, up 173% year over year. But look, so you mean to tell me you went from 15 cents and now you're at 41 cents on a $220 stock? I'm going to go out on a limb and say the EPS number isn't where all the focus is going to be, my friends. There's Dr. Paul. Dr. Paul got the Tiesto bumping for you. And we were just talking about stitches. Not the rapper, but stitches in my car. Next quarter looks like 42.5% growth. Current year rounding out 190%. Next year, 84.22%. So you do have some growth. Dr. Paul, I was telling everybody how I was trying to get the stitching done, and people think that I'm crazy, that like it's not, there's no way to do it. I didn't want to argue with anybody. It's, you know what it reminds me of? I went to a Mercedes dealership in a 2008 CL63 AMG. And I go to the dealership, I walk inside, and I was like, hey, buddy, I wanted to know if you had any used, like, CLs on the lot. The guy looks at me dead in the face and goes, CLs? That doesn't exist. I was like, okay, we're done here, because you work at a Mercedes dealership, and you have no idea what you're talking about. Obviously, the CL is now the S-Class Coupe. I didn't even want to get into it, because I was specifically looking for a different CL, but that's, anyway. I don't like it when people who are like experts tell me that things are impossible or that no one's going to do that, and like it just doesn't make any sense. You could say like, oh, that's not how it's done, but I don't know, maybe it's getting lost in translation. Who knows? Okay, rant over. Or I may go back to the rant later. I'm not going to lie. I'm in a ranty kind of mood today. I don't know if you could tell. And I had a lot of coffee. A lot of coffee. Okay, so agreement. One analyst over the course of the last week has increased their earnings estimates for the current quarter. One has done so for the current year, and one has done so for next year. But over the last 60 days, you do have one analyst that has dropped their number for the current quarter, one that has done so for the next quarter, current year, and two for next year. So why is this Zach's ranked number 3? Well, this is why. Remember I was telling you that we're all about aggregating the data that we get from other analysts. So when we see this kind of thing in the analyst community where they're not agreeing on something, that tends to throw it almost instantly into a Zach's ranked number 3 hold. Okay, so again, what we're saying here is that the analysts are kind of mixed on this. Now, I do like number 3 holds around earnings season, because whenever there's like a little back and forth and they're not agreeing, that's when there's opportunity to make money, because somebody's got to cover their short, somebody's got to sell out of a long position, something's got to give. So I do like this. Trevor, you have a CL? You like the CL? I'm trying to get my girl. I have this thought in my head where I can get her to get an older AMG, CL AMG. We can get it under warranty. We'll buy a aftermarket warranty, and there are some good ones out there. And so I can have an awesome big coupe to go along with the sports car. That's kind of my dream. I kind of trick her into liking what I like, but she's got good taste. What can I say? I mean, she's dating me. You know what I mean? Hi-oh! I need a little, like a dum-ching. We need the sound effects. That's what we need here. Okay. Overall magnitude. And what does this mean? So this is how much the EPS consensus has changed based on the analysts making these moves. So 90 days ago, we were looking for 41 cents. And since these moves came out, we're still looking for 41. So nothing, no change there. Next quarter, 55 cents to 57. Current year, $1.25 to $1.26. Right back to $1.25. Next year number from 225 to 229 to 231 to 230. You know, it's not really moving. They're not moving the needle too much at Netflix. And the surprises, like I said, a couple of disappointments, small disappointments. shouldn't be much there. All right, let's bust out the G14 classified stuff here. We're going to, I mean, who do we even, this is the problem. We don't really have a comp for Netflix, right? Just really doesn't exist. Now, I do see this. Will all IPTV stuff bring Netflix down? I think it's going to have an effect, for sure. But one thing is like Netflix, it's like HBO, right? Did Netflix take down HBO? Well, no, right? HBO is bigger and better because of their original content. So I think that's kind of what it's about. It's the original content that you can find on Netflix, which is really helping to support them. And that's, if you read through some of these reports, that's what it's all about. The new content that they're bringing. It's not, like I want to have the news or whatever, is on TV now. Okay. I'm assuming that's what you're talking about, by the way, Trevor. Look at the revenue growth, though. I mean, this is about as solid as it gets. 32% this year. Last year was 30, 23s, 25s, 21s. Got a little hairy here, but just strength. Then you got 29% and then 20%. So it's supposed to slow, I guess, into 2019. Do not concern yourself for 2019. I'll be a dinosaur by then. Look at the 2018 numbers. Specifically, you get nice growth in this quarter, nice growth in next quarter, and overall nice growth there. So 30%, if you promise 30%, that's going to keep investors happy, okay? At least keep the enemies at the gate. Let's look at the EPS side of things. Like I said, it doesn't make as big of a difference here on the EPS. What do you do with 4,000 channels? We've got to talk about this, though, Trevor, because I've been looking for a way to watch my Barcelona games, which I can on Sling TV, I found out. And that's like $90 for the whole year. So we're going to have to talk about this in the chat. Inquiring minds want to know. So you see the big number for 2017. 2018 is also supposed to have the growth. 2019. So in terms of just sheer growth numbers, it's supposed to be good. But you're starting from a pretty low base there. And, they do have a tendency to disappoint, okay? So I don't know that 41 cents is going to happen for these guys this quarter. You are starting to get some competition here with the likes of Amazon, right? Amazon's getting in trouble for bundling here pretty soon. There's no way bundling the Amazon Prime with the video, with everything. That's where the problem's going to be. Like Rick and Morty style. I want like a. That's what I need. All right. So what do we say about EPS? Obviously, solid growth. That's good. It looks great. All right. Now the valuations. So I keep saying don't worry about PE, don't worry about PE, and then I click on PE. Like, what's the matter with me? That's okay. We can do this. Look at forward PE. I mean, just off the charts. Literally off of the charts. But historically, this can tell you that people don't care. I didn't just look at this, do a snap judgment, and say, yeah, people don't care. Look at the empirical evidence supporting that people don't care. Do you think there's anybody out there justifying 97 times forward earnings for Netflix? Like, no, 97's good. No. They didn't defend 106. They didn't defend 137. They didn't defend, look at this, 501. They didn't defend 78,361. That's a PE. That's a forward PE. Well, when they were making like a penny, you know what I mean? But that's pretty funny. Of course, negative is always nice too. So this just tells me that let's look at the, why don't we look at the revenues? What did I do? Revenues. Price to sales. Even this is getting rich, right? Now we know it's kind of well documented. We talk about how the market is inflating a little bit here, 3.5 times revenues. Netflix is up here at 9 times revenues. This is the highest that Netflix has been ever. Something to think about. Look at that, 2015, 2016, got up to 8.9. We're past that now. It's at 9%, but you are doing some revenue growth here. All the pay-per-view channels, all languages, French, German, Polish, Russian. What kind of bootleg setup do you have going on up there in Canada, Trevor? I want to hear all about it. Do you have a satellite dish made up of maple leaves? Is that what the secret is? If so, send me maple leaves and hockey sticks. Down to South Florida. We have a hockey team here. Maybe it'll work. We'll see. Panthers play the Vegas Knights, I think, tonight. Vegas is on a back-to-back here. It could be good for the Panthers. I might walk on over there and check out the game. So valuations, crazy talk. I mean, crazy talk. But is that going to be enough to sink the stock? I don't know. Trevor, I got to hear all about this. Bar chart. What's going on bar chart? All right, guys, move this to next week. Pull up side-by-side view here. 219.67 works in any part of the world. That's what I'm talking about, Trevor. 219.67. We're going to call that 220. There's no way this didn't. See, Netflix, not Netflix, bar chart trying to get me. You can't trick me. Boom. There we go. Now that's a number. That looks more realistic. All right. At the money calls. 830 by 845. We're going to call this 838. At the money puts going 870 by 885. We're going to call that 877. You see what I did there? 1715 is what they're looking for out of a $220 stock. 7.8% move on Netflix is what they're looking for. $17 worth a holler. Okay. To the charts. Well, first, actually, before we go to the charts, to the estimates. Oh, that's right. There was two other things I wanted to look at. Okay, hang on. We're going to get back into this for a second. Earnings surprise. On a small beat, they get big move. And then you go over here to the sales side of things. Small beat, big move. So you're kind of wondering, right? There's moves here, there's moves there. This is another scenario where either it does nothing or it really moves dramatically. Nothing or dramatic. Remember the other day, I had my new non-financial metrics surprise here. Take a look at this. Yes! I bet you there's going to be some stuff here. Look at this. Paid subs, total domestic contributions, subscriptions, international streaming. This is going to be where it's at. International streaming. Isn't this a cool number? So, subscriptions at the end for international streaming. Of course, that June when we have the spike, we don't have the data for that, but look at this. This is 3%. The 3% surprise there. 17, I don't believe that. Negative here, though. It's negative there, so that's pretty good. Why don't we have this data point? I wish I had this data point because I bet you that would tell us something. Let's see if we got another one here. Just international revenue. No, look, you had a drop in international revenue, so it's got to be the subs. Let's see if we have paid subs for international streaming, if that's a number we can get. So I think this is a number we're going to need to focus on, is this international streaming number. So look for 57,184. And I'm assuming that's 57 million. That's right, Hefe. We are rocking out, my friend. Dr. Paul's in the building, and it's Miami Friday, so... Speaking of Miami Fridays, I went down to the Fresh Market, and let me tell you, it does not belong in this town, because it was like being back in Chicago in a nice fancy grocery store. But the problem is that we don't have fancy grocery store stuff anymore. Give me a hot second, guys. Hang on. It's always something. Okay, everybody. Pardon the interruption. Just can't get work done on a daily basis, seems like. It's a good thing I'm so good on the fly. Mere mortals would be completely troubled by this interruption, but I'm golden. Okay. Where were we before I was so rudely interrupted? Yeah, right? My bookie? Something like that. Let's take a look at the chart here. Oh my god, I've been swatted. Look at this, look at this old school fib that I had pulled up here a while ago. I love it when a good fib comes together. Now, I had... The doggy's good. Everybody's good. I drew this fib from the July low to the August high. This was probably last time we did this for earnings. See the retracements. And I drew the extension. And I drew this extension, you know, a couple months ago, right? Or back in July. So it's not like these levels went in later. Look at how the market came up. They tick that. They bring it back down into this. They come right back down to the 23.6. Work themselves up through that. Find a little bit of resistance here. How much do you guys want to bet that this is another fib? Watch. Negative 76.4. Okay, so it wasn't another fib. Not really. All right, so fib structure dead. You can remove it now. Look at this move. 83 to 220. 83 to 220. We need this. At least this little structure is going to set us up something to take a look at during this earnings report. $17 holler to the downside. That puts you down at 202, which is a 50% retracement of this move. The 200 or the 50-day rather, not even the 200-day, but the 50-day is parked down here at let's get the exact number for us here. 196.65. 196.65 there, guys. So that's a little bit further than what the market is pricing in for us. And then the upside, let's draw a couple extensions. We're going to do just the popular ones here. Do negative 38.2 and negative 23.6. So that gives us 237s, which is also pretty much what the market is pricing in. So the market is basically pricing between the 50% retracement and the 23.6 extension based on where it's trading at today. Okay. Let's keep those numbers in mind. The nearest, let's look at the bar chart. Okay. Change from side by side of the stacks. This way you get calls on the top side, puts on the bottom. So there is a 237.50 out here. At the money is basically the 220. That's an awful long way to go. Bulls can do the good old halvesies here. We want to get out of this front week, though. Go to the front the next month here. So the February 16th expiration. What's going to end up happening is these strike prices are going to change, right? You're not going to get all those little strike prices in between. If you want those, you got to go to February 9th. And we do actually have a lot of stuff on the 9th, so we can mess around with the 9th here. All right, so let's look at this now. 220, I said 237. Try going half of that. About this 227.50. Going long, the 220 is going to cost you 988. Simultaneously going short, the 227.50 is 660 that you're going to get back on that. That's 328. The difference in strike prices is 750 minus that 328 is 422 on 328, or 130%. So here's a bull debit rather. Long Feb 9, 220, 227.50 call spread for a 328 net debit. Okay on the risk versus reward. Because if it moves, it's really going to fly, I think. Right? If it has a good report, it's going to break through to new highs. And the high here, this is 226, so it'll have no problem approaching 237, I believe. So then, Dave, why don't you get more aggressive with that? And you can. So one way to get more aggressive with it, we had this up. The good old-fashioned pinch in. So what I'll do sometimes to make it less expensive for me to put something on like this, I will pinch it in by going out of the money just a little bit. So in this case, going to the 870. And then doing the 870, not going to 870, paying 870 for the 222.50. Because basically, what you're thinking has to be is that at 220 to 222.50, right? If this is a $20 stock, right? If this was a $22 stock, the difference from 22 to 22 or to 222.50, that would be like a quarter on a different stock, right? So you're not really all that far out of the money. I mean, percentage wise, this is like a blip, my friends. So 870 is what you would pay for the 222.50, and you'd still get 660 for that 227.50. So here's 210. Difference in strike prices is $5 minus the 210. You can make 290 on 210, 138%, right? Right. Or you can keep it super close and buy more lots, right? Because this makes it cheaper for you. This makes it cheaper. Now you're only paying a 118 for it. And if you want to go nuts and buy 3 of them, then go ahead. If you don't, then don't. Similar return that you're going to be able to get. The real good stuff isn't going to come unless you're further out of the money. But I wouldn't suggest going that far out of the money, okay? Because as you start to get towards the all-time high on this stock, you know, the risk increases. The risk of you losing all of your money increases significantly the further out you go on the long end of your call spread, okay? Now let's flip to the bearish side of things. And remember, we said 202. That actually might hold. So you've got the 220s here as your anchor still. 202 is a long way down. The half puts you at 210. We want to make these a little cheaper. You don't always have to go all the way out there. I'm going to show you the difference in return, potential return between the two of these. So first one I'm going to do is I'm going to show you the big one, okay? The 220 all the way to the 210. So the 220 would cost you $1,013. Selling the 210, you get back $580. So $433 is the net outlay. Difference in the strike prices is $1,000 minus that $433 means you can make $567 on $433 or 130%. Okay. Now down here, the 220 still going to cost you $1,013, but if you sold the 215 instead, now $238 is your net outlay. The difference in the strike prices is $5 minus the $238, $262. So here you make 110%. So an extra 20%, is it worth it for the $5 up there? And then having to put out all that more money? Again, what you could do, you can slide on down. You just go a shade, just a hair out of the money. It's not far out of the money. It's a hiccup. 217.50 put's going to cost you $893. Selling the 212.50, you're going to get back $670 of that. So 223 is the net outlay in this case. Difference in the strike prices is $5. So you can make 277 on 223 or 124%. So stock doesn't have to move as much. Still going to get higher rate of return, but you have a higher likelihood of losing all your money because you're going out of the money with that put spread. But I still like that. Bear debit, long, Feb 9th, 217.50, 212.50 put spread for a 223 net debit. Now for those seeking credit spreads, there's actually a couple of opportunities here. One idea is going out and selling sub 200. So here's a bullish credit spread. You could sell the 200 put for 298, simultaneously buy the 197.50 put to give yourself some downside protection. It's going to cost you 248. Pretty easy numbers here. 50 on $200 worth of risk, you can make 25% on that end. And if you want to go condor, find yourself a fitting level here, which I think 237.50 is a pretty decent cap. And if you went out to 237.50, you could pretty much do the same thing. If you notice here, difference in the strike price is also 50 cents. Go ahead, bar chart, reload on me. That's fine. I'll be here waiting for you. So you see here, selling the 237.50, 240 call spread on this end would also get 50 cents of credit. So you do have the option of doing the 197.50, 200 put spread plus, and this is short, plus going short the 237.50 400 call spread, your net credit is going to be a $1 holler, okay? And then the amount of money you would have at risk in this case would be $1.50. So you can basically make 66% on Netflix. And all you need to have happen is Netflix to stay between 200 and 237.50 at expiration on February 9th. Now, here's the thing, guys. We've been doing a lot, or I've been showing a lot of condors, encouraging people to put on these condors because of how the market's been reacting here. There haven't been, or I haven't seen, a lot of huge moves in this season. And then I've seen a lot of head fakes, actually, in this season. Now, part of it is, like, a lot of these banks are taking these write-downs. So the algos are hitting them right away on the write-down, and then they're trickling up over the course of the next few days. But that's been sort of the MO here early on in earnings season that I've seen from a lot of different stocks. So that actually helps you if you're trading iron condors. That kind of choppy behavior back and forth, because again, you just kind of wait for it. So I'm going to put here a Netflix iron condor, 197.50, 200, 237. Oh, goodness. 237.50. $240 for $1. That's an option. Look at that. That's a lot of madness going on. That kind of. So you're basically banking on Netflix not moving that much. And we've seen periods where Netflix really doesn't do much. And we know that there's a lot of analysts, there's a lot of back and forth between these analysts. We also have the 50-day down here at 200, which should surprise should support rather, an awful lot of action to the downside here. And then the upside, you just don't know what's going to happen over there. But we do know that the valuation is a little bit stretched. It's a little bit out there. So this is a tough call here on Netflix. Now, you've got these gaps on earnings, and then they come and give it back, right? Gap on earnings, and then they come and give it back. But then eventually, this is a month out, right? So here's a spike, retreat in a month. Spike, retreat in a month. So there's been a lot of spikes and retreats. I think it might happen also. I think it might happen again. This is the quarter of the condor, my friends. Trade that pays is the condor. I'm going to do it. I don't know why. I do know why. I don't know why I'm feeling like nothing is going to move this earnings season. That's the part that's weird. But I'm not so far, even running Surprise Trader, obviously I have a lot more exposure to this now, and I just don't see it. Things are they just don't move. And if they do move, they give it back. What I've seen early on. How is that Constellation Brands holding up there? Are we right in the middle of that thing? I didn't post the I have the PowerPoint presentation for the GBU yesterday, and I didn't put it up there. What was the bottom end of the Condor? Was it 215, 210 where the put spread was, or was it 220, 215? Oh, right under, was it? Was it 220? I think it was 220. Yeah, because it was trading at 218 yesterday, and I was saying just take it, take the small. Kurt, you should still be pretty close to making money on that, though, right? Because the overall credit, I think, was $2, maybe even more than $2. And if it's at 218.48 right now, you should be okay. Let's look at AGN. From a technical perspective, Mr. Wallace, it would appear so. It would appear so. At least in the short run. See, that's the thing with these condors, folks, is that getting the max gain on them when we do those tight is more of a rarity. But you have a higher likelihood of success. So odds are you'll make a few bucks, and you won't max out. But you will make a few bucks. Just because the time, because you know you have time value on both sides eroding. The more it bounces back and forth, the better off you are. And that, I think, is going to be the theme here in this earnings season of just this bouncing back and forth. Think about how far we've come. And in the markets, who's going to jump in and really short this thing? It takes some chutzpah and a whole lot of money to sit up here and short this thing ahead of that. So I drew a fib here on Allergan for you, Mr. Wallace. That's a pretty good point there, Jim. If you like Allergan or any stock, we've talked about this before, about selling those naked puts, right? So that involves waking up first thing in the morning, taking a shower, walking straight to the desk without naked puts. Okay, yeah. So you're going to sell an out of the money put. Now here's the good news. Because this stock is down, right? There's a lot of juice in those puts to the downside, right? So people are paying up for those. So if you sell it, let's say a 160, we're going to do this right here. Look at this. You sell the 160, you get to pocket that premium. Then if the shares dip below 160, then you have to buy it at 160. But hey, that's okay. So look at this. So in this case, this is, well, it doesn't even have to be 160. Let's say 170s, right? So now you're on the hook for buying the stock at 170. But if it stays above 170, you get to keep this 194. If it goes below 170, then you get to buy it below 170. If you're longer term bullish on a stock, that's a great way to enter. Okay? Fantastic way to enter. Now, what's the good stuff happening here on Allergan? One, couple of higher lows there. Commodity Channel Index oversold. Now it's starting to creep on back. They have gotten past their 50-day moving average. This is a good sign. If you notice here, got into trouble, sold off. But now they've fought their way through it. But you do have a fib here at the 23.6 fib. So there's a partial fib, and you do see there's a little bit of volume there. There's also a volume trough into here. So if it can break that, then it should be clear for 200. So if it can get over here, I think we're going to 200. So yes, it appears in the short term. Point out the bounce. What else did we do? STZ. There was one more I wanted. What did we just... Oh, so AXP. We're having some AXP issues, huh? I saw the numbers last night, and basically what's happening is we're getting this... It's the whole write-down thing, right? Companies coming in, taking these... Look at, they took it right down to the 50-day. Don't be surprised if there's a bounce. Case in point. I had these guys report on that Friday. Stock gets beat up, and then it gaps up on the Monday. So here we are after the report. We're down a little bit. Let's see what happens on Monday. Okay. dare I say, buying opportunity. We shall see. All right, gents. That's all I got for you here today on Zach's Live Trader. I'm going to enslave my girlfriend and get her to color the stitching in my car. We'll see. We'll see how much gets done. I will share pictures with you guys. I have some pictures. I can share you other pictures. Show you what we got going on. And what else? Send those emails for the shows that you want to see next week, because we should have more next week. I do have a surprise trader promotion going on next week, so that will be taking up a little bit of my time, but not all of it. So I should have plenty of time to get these done. So shoot over those suggestions, and I would try and make it happen. For the new faces, guys, thanks so much for coming out. I apologize if I go off topic or run to the door or do all sorts of silliness, because that's kind of what I do here. So if you're looking for a no-nonsense 5 or 10 minute video, you are in the wrong place. But if you like to mess around, look at stocks, talk a little garbage, chat in the chat, then by all means, my friends, come on down. Shoot me those emails, livetrader@zax.com. Let me know what you want to see. Of course, we got the Discord chat, which we popped up here a little bit earlier. I want you, each and every one of you, to have a fantastic weekend, and I will see you all next week. Have a good one.